Hello friends, welcome to Veranda Excel. In this particular study note, we are going to discuss about nature and scope of economics. So, first and foremost thing, we have to understand a definition of any subject we are going to study. Since we are going to study about business economics, let us understand what is its definition. In this particular study note, following are our objectives. First, there are few terms which are involved in business economics. What are the two terms? Number one, business, and the next one is economics. Putting together, we are having a different derived word called business economics also. We will first try to understand that. Then, having understood business economics, what we have to do? We have to understand about important attributes or elements involved in the term called business economics. So, this is the two primary focus which we are going to do while learning this particular study note. We will move forward. So, since the first terminology in the definition, what we are having is business, let us try to understand what business means. Everybody loves money, right? So, business certainly helps us to get more money. It is nothing but a person's occupation, a profession or a trade. The method in which he is going to get more money by investing money. So, money gets money. So, that is what we have to understand. So, it may be an occupation, a profession or a trade. You may work for one person and earn out of that, or you will do some service and then earn out of that, or you will sell some product or service and earn out of that. So, that is nothing but a business. Now, we have to understand that how we can earn money. For that, we have to create an organization. How an organization can be created? There are various forms, depends upon country to country. So, we have listed down around say 7 or 8 types of organization here, so that we can understand briefly about them to learn about them. The first and foremost thing is about the sole proprietorship. You don't depend on others. You are going to work on your own. You can do your sole proprietorship by way of either starting a small petty shop also, or you can do your service to an attest function. You are all chartered accountants, correct? What you are going to do today, you are studying for chartered accountancy course. Some 3 to 5 years down the line, you are going to get qualified. If you are going to get a certificate of practice, even as a sole proprietorship, you can practice. And it is not that only a profession has to be CA. There are sister concerns also where you can practice law, where you can practice company secretaryship, where you can practice cost and management accounting also. So, there are various options available for us as a profession also. And look into trade. There are times whereby we will buy a product for a lower amount and sell it for a higher amount. That can be done. The petty shop person normally does that. So, now slowly at a smaller level, sole proprietorship might help. But what would happen when you are just growing the business? Alone, a single person cannot manage. So, what we have to do? We have to involve other people. So, then comes the partnership. So, 2 or more people joining together, and what they are going to do? They are going to carry the same occupation, profession or the trade. So, the same activity, the one thing is that they are going to split among themselves, they will work together, they will earn together, and any profits or even loss if incurred, they have to share among themselves as per the agreed ratio. And comes the limited liability partnership. The first 2 types of organization what we have discussed are primarily relating to unlimited liability. Now, what would happen? Because you are carrying on a business, you want to limit your risk, right? At one point in time, we will be very clear in telling that what is the downside risk I am having. I want to protect my downside. That protection can be got from a limited liability partnership. So, limited liability partnership will clearly define what is the maximum loss a partnership is willing to take. So, beyond that, that particular partnership is not liable to pay to the persons who are affected because of that. Next comes the most important thing, joint stock companies. This is the more important and prominent thing for doing any business, because this helps us to divide the management from the ownership. Okay, a person may be a shareholder in a particular company. There is no need for the person to work on it on a day-to-day basis. Only if there is any profit, he would be shared in the form of dividend. In case if the business is not earning any profit, what would happen? The management may not declare any dividend. At the same time, there is no liability beyond what he has subscribed to the particular capital. So if a company is earning loss, the management will not go and ask the person who invested in the company to invest more. So that is one of the advantage we are having in a joint stock company. And what would happen over a period of time in a joint stock company, you intend to earn more. When you started earning more, there are benefits which are going to come. When the benefits are going to come, there is always a chance a shareholder may wanted to sell from his side to some other person for some profit so that he can cash it out. The profit scenarios there. And then we are having something called as cooperative societies. Here, there is no intention to make any profit, but human or welfare aspect comes into picture. So what would happen? There are group of people who are joining together. One of the best example for a cooperative society is Amul, because we all know that the white revolution has happened because of that cooperative nature among the people who were rearing cattle. Okay, they started collecting the milk, and it is very clear that those small people, the farmers who are rearing the cattle, they may not have adequate facilities to store milk, but there is an organization which is got created, and that forms an initiative for us, and Gujarat has shown way for us in that particular sphere. Now in the real spectrum, if you are asking me whether it is possible for me to start a cooperative society, the answer is very simple. Yes, as long as you are having a group of people and your objective is to bring benefit for those society of people more than profit. If you are interested in sharing the economically available resources for the optimum benefit, then cooperative society is one of the most important organization or the way of business we have to understand. Next comes the trust. Presently, this trust is very, very, very popular. Do you know the reason for that? Because it has its own tax advantages in case if it is for charitable nature, or there are times whereby family trust also there. So the family trust are not only for the basic things like doing other businesses, it is also for earning profit and ensure that the profit is distributed among the co-partners or the beneficiaries of the trust as per the trust or will. Because there are times whereby you might have earned billions of rupees and you want to pass it on to your next generation, that too in some specified ratio. You can create a trust, a family trust, and ensure that it is passed on to your next generation. And it is not that we have to go like this. Sometimes what we will do, we will just join a group of person. I just want to do some activity together, and rest of the time I want to do it differently. So I may be a sole proprietor, but for doing a particular business only, I'll just go and partner with some other person. That is called as association of person. So for doing that particular activity, if I am grouping myself together, then it forms something called as association of person. In addition to this, there may be some other organization, any other type of organization what we are going to have. As long as that kind of organization is recognized by the law of land, then we are comfortable in calling it as a business. Having said that, various types of organizations, now we have to proceed further to know about the business which is relating to whether it is a profit motive or a charitable cause. It is very simple that any business, if it has to be performed by a group of people, it is with the interest to earn profit only. Nobody will be interested in putting a money of 1 rupee today to earn less than that. I would be happy to put my 1 rupee today, tomorrow to earn more than that. That is 1 rupee 10 paise or 1 rupee 50 paise, etc. So we always look for return on investment. That is always a business. But there is a different sphere also available. What is that sphere? It is about welfare of the humanity. And there are some people who would be interested in making some business arrangements, some business costs to ensure that the overall level, the society is getting uplifted. That is called as charitable cause, and that is also called as business. One of the best example is about the nationalization of the banks. At that point in time, the thought process of the great Indian leaders was that they do not want to have any profit, but ensure that the loans and the credit facilities are given to the most people who are deserving it, who doesn't have any important background like having enough funds, etc. with them. So what they will do, they will naturally reach out to the banks. Since they do not have proper backing for them, the bank will normally reject that. In order to avoid that, government at that point in time thought that it is better for them to go ahead and offer them the loans as per the laws given by the proclaimed by the respective government. And the next one, what we have to understand is the method in which those are getting performed, the business are getting performed. It may be physical, that is, you are going to a vegetable market. The vegetable market is actually a physical market because the buyer and seller are in the same place. They are going together, they are seeing each other, and there is a product or service which is available there. That is called as the performance in the mode of physical existence. Next is virtual. Stock market is the best example for that. Are you going to see who is the seller or are you going to see the buyer? No. If you want to sell today, you will just tell so and so shares 100 at this particular rate, sell. The action happens there. Similarly, somebody wants to buy, he will also put a buy call there stating the name of the share, number of units and the rate at which he is interested in buying, and then the transaction is completed. That is also a market, but virtual. The buyer and seller are not physically touching each other. And I have to tell you one thing, this virtual market is making the entire world a simple global village. Next is the local market. This is one of the primitive in nature, whereby the people, wherever you are living, right, you will go to the nearby shop, the mom and dad petty shops, right. Those are nothing but the example of the local nature of businesses. So it would happen near your street or near your town, etc., or in the villages where you are staying. Next is the national. The national one is primarily relating to the wholesale market and even stock market, National Stock Exchange, NSE, right. It is one of the best example for national level performance. Even though it is an example for virtual market, that is also the trades are getting happen at the entire India level. So it is a best example for national market also. The next one is international. Sometime before I have informed you that world is becoming a global village, correct? And you can transact in India with some person who is staying in US or UK. And the best example for that is the forex market. Today we can buy futures and options in stock market sitting at home in the night, because almost except for 30 minutes, that forex market is available almost 23.5 hours in a particular day. So anytime you can log in, you can buy or sell your futures and options in a forex market. Moving on to the next slide. Now we are going to understand about economics term. Okay, we have already understood what is meant by business. Now we have to understand what is meant by economics so that we can take it forward. First of all, economics is nothing but a terminology which studies about the wealth. Everybody loves wealth, right? So the wealth is actually a subjective matter, because the reason is that wealth is nothing but a count of material items what you are having. Okay, from our perspective, what we will tell, if a person is having a lot of car or a lot of money in his bank account, and then he is having a lot of bungalows, etc., then we will think that he is a wealthy person. But will he be happy? No, that is not there. But there may be some person who is nothing but a hermit, who is staying there somewhere in the far off mountains. He doesn't have a proper house, and from our perspective, we will tell them that he is not a wealthy person because he doesn't have a proper abode to sleep, and he doesn't have any bank balance, he doesn't have any conveyance to commute, etc. But that is not the case for him, because he is more happy. So economics here is not about happiness, it is about wealth. What is the material thing we are having in our life? What is the thing, tangible things which we can show off to others? That is the study of wealth, which speaks about economics. Then what are the items which economics actually deals with? It deals with three important things. One is production, the other one is consumption, the third one is distribution. Okay, so why production? Because there may be some material available, which we call it as a raw material, that may be converted into a different one, something called as a finished product, right? So why we are getting converted? There are times, take the case of daily milk. Okay, milk is available to you, raw milk, right? On a daily basis, it is coming delivered by your milk vendor. Can you directly consume it? No, right? Few people, yeah, will do that, but at the same time, predominantly what would happen? People will simply boil the milk and then ensure that either they are preparing tea, coffee, or some other things, whatever they are consuming on a daily basis, they will do that. And what would happen over a period of time, the milk got converted into some other different product, and that particular change what you are having is called as production. Okay, so now why we have produced that? Do you want to prepare a coffee or tea and then throw it out? No, we are going to consume it. Okay, that if we are preparing for ourselves, we can consume it, but there are times whereby there may be some guest, etc. So you will go prepare the coffee or tea and then go and offer it to them. That is nothing but a distribution. It is a simple thing which we have to understand, that you are having some material, and that material you are making some change, some minor change which is happening, and it is going into a new different product. And after going into that particular product, what are you going to do? Either you have to distribute to other persons so that ultimately it is consumed, because the ultimate objective of any production is nothing but consumption. So you produce something, if you are just keeping it as a stock, it is not going to be of any use. But if it is ultimately consumed, then the satisfaction for that particular activity has been achieved. So production of any item will end only with consumption. In between comes the distribution, because you have to reach the ultimate consumer. Another example I want to give is that we all know that, okay, Pune is one of our famous thing for automobile industries. So various vehicles are getting produced there. Do you think that all the vehicles are getting used only in that particular area? No, across pan-India network, every automobile dealer we are having, correct? So what they are going to do, they are going to procure that particular vehicle from the production place, and they are taking it to the various dealers across India, and they are reaching the ultimate consumer. So even though it is getting produced at one particular area, what is going to happen? You are going to take that by way of your distribution network to various places where the ultimate consumer resides, and then you are going to give it to that particular person. So end of the day, distribution helps the particular product or service ultimately consumed. So between production and consumption comes the distribution part. And sometime before we have spoken about a thing called as there may be a hermit, etc., who may not have a place to stay, an abode to stay, or may not have conveyance like we are having a car or bike or a scooter, etc., but still he is happy, right? So there are some economists who will come and tell that economics is nothing but your values and beliefs, because we all know that one of the best example for this is the currency. Okay, we all know that what happened in the year 2000, some 2 years before, correct? The reason is that it is nothing but a piece of paper where the country has told that we recognize this paper for so much of value. And when the country is going to tell that I am not going to recognize that any longer, then it is nothing but a piece of paper. So end of the day, anything, okay, what we are treating it as a wealth is nothing but your belief. Another example, what I want to give you is that there was a small boy who was walking down the street. Okay, suddenly he is seeing some small glass pieces, so he is taking them. Okay, he has shown it to a person who is a normal vendor, street vendor, and that person has told that it is nothing but a piece of glass. I'll offer you some 10 rupees, you can give it to me. That person has not given to him. He has gone to the nearby shop. Okay, and it is nothing but a small piece of glass, and that person is a jewelry person, and that person, after looking into it, he told that it is one of the diamond and he is ready to pay more. In the eyes of the vendor, street vendor, it was only a glass. In the eyes of the person also, it is only a normal glass piece. But the ultimate objective here is that you have to go to the right person to know the right value. So that is more important here in economics, because this is nothing but how you value a particular thing and what is your belief. And a thing which is highly valued by one person may not be valued by another person. So I may be interested in getting a particular thing or liking a particular way of lifestyle, but the other person may not be liking it. Correct? So from his perspective, he will think that this is a waste, whereas from my perspective, I will be thinking that this is the most important thing which I value and for which I am ready to spend. And next one is about, it speaks about the relationship between ends and scarce means. Why the ends and scarce means? It's very simple. There are various wants available for us. We want to satisfy everything. Okay, but do we have the raw materials? Do we have enough resources? The answer is clearly no. There are two problems here. One, the problem of abundance. lot of things are available, I do not know what to choose. The other one is the problem of scarcity. There are very few things available, but my want is unlimited. I have to satisfy my unlimited wants with the limited resources whatever I am having. So unless otherwise you know about the relationship between the ends and scarce means, it is not possible for us to understand about the economics. And if you move further, okay, economics, the requirements of wants, etc. also vary from time to time. The reason is very simple. In the morning, I may be hungry, I want to have some idli, dosa or bread, etc. as my breakfast. But 2 or 3 hours down the line, what I will do? I will be looking for a food, okay, full of lunch, etc. And in the evening, I may be looking for some coffee, tea or snacks, etc. While in the night, I will be looking for a dinner or supper. So over a period of time, even though I am looking for food, etc., it varies, right? It varies from time. And in India, we are looking at something like idli, dosa, South India. In the North India, they will have a different set. Like for nashta, they will be having something like kachori, etc. But if you go to US and other things, they may be having a burger or donut in the morning. So from place to place or time to time, based on how their lifestyle happens, this will get changed. And it also changes from time to time also, as we have mentioned some time before. The reason is that in the morning we are looking for breakfast, in the afternoon we are looking for lunch, in the night we are looking for supper or dinner. So when the time changes, similarly over a period of time, when a person is at around say 15 years of age, he may be looking at having a bicycle or even a scooter or a bike. Whereas at the age of 25, he may be looking for a car. Both of them are automobile only, but the expectation is somewhat different. But at the age of say 45 or 50, he prefers something driven by others so that he can be very relaxed, sitting at the back. Okay, so what we have to understand is that it varies from time to time and person to person. Okay, is the economics a new concept for India? No. Some 2000 years before, okay, there was a person called Chanakya, who is also called as Kautilya. He has also written a very great treatise that is called as Arthashastra. Okay, Artha means it speaks about material thing, Shastra. So the scope of that particular treatise is about material well-being and of a particular subject of the state. So he has provided various things which are all relevant for the particular period. Some of them are relevant even today. That particular treatise speaks about taxation, which is one of the important aspects which we are even doing today. So what are the items which you are thinking about the tax and other things? Yes, tax is also forming part of economics because it helps the government to earn money. Okay, government is the more important entity which facilitates the business. They are responsible for proper governance of any business. If you look into the book Arthashastra, it speaks about various aspects how a king has to ensure that he is properly levying taxes based on the produce. One of the important chapters speaks about having a collection of tax dues in form of the produced material. For instance, if a person is going to have say 10 bags of rice or paddy cultivated, 6 bags pertains to king, whereas 4 bags pertains to the person who has produced it. So that is the kind of precise information what he has provided. And this Arthashastra is not only about that, it speaks about spy activity and other things also, which is not related to economics. So some chapters of Arthashastra are primarily dedicated for the governance of a particular country and its subject. Moving on to the next one, I have spoken about some 2000 years before. Very recently, some 200 years before, we are having a person called Adam Smith, who is called as the father of economics. So he has written a very big book, okay, which is called as Wealth of Nation. It runs into hundreds and hundreds of pages. It speaks about why a particular country is generating wealth in a particular space. The reason is very simple. Look into the history itself. Okay, there is something called as spice route. Do you know what is meant by spice route? The spice route is nothing but from Europe, there is a way in which you have to travel through the Europe and Eurasia and Asia, finally reaching India and collecting the spices which are actually available here and transporting it back to Europe. So the more important thing to understand from that is that the items which are available here may not be available in some other place. The idea of economics is movement of these goods. That is, wherever the demand, you have to supply there. Similarly, the items which we are consuming here may not be available in the area near to us. It may be coming from far off places also. As informed to you sometime before, even the automobiles what we are driving today and parking it at our home may not have been produced near our home. That may have been produced in a factory which is 200 kilometers or 300 kilometers or 400 kilometers away from the place where we are residing. And similarly, what would happen is that it may not be coming from the same country also. For instance, a lot of people are wearing jewelries, right? Of course, if you are a female, you will be much more interested in wearing jewelries. Look into that. Okay, there are various items which are forming part of it, copper and then gold and then stones, studs, etc., which are forming part, minute particles which are getting embedded into either a harem or a ring or a earring, etc. All those things are done by different people, and across the world we are having a lot of mining areas, and they are taking out the diamonds. But do you know where is it getting polished? Across the world, 80% of the diamonds are getting polished in our Surat. Okay, the people there are specifically, okay, much more specialized in doing that particular activity at a very optimum cost. The answer there, the more important thing, the stress point in our information is that optimum cost, because a polishing activity can be done from any place, but where you are paying, what is the money you are paying, that factors of production is more important. Only that will help you to ensure that you are in a very good economic state. So there are various factors of production which are available, and you have to ensure that you are paying for that at an appropriate level, because without money nobody will work, right? But at the same time, whatever you are paying, you have to ensure that you are getting a proper value for it. That is available there. That is the reason why they are using that particular area. And this wealth of nations specifically deals with those aspects of a particular country. Okay, we all know that if you look into robotics, we always look for Japan. If you look into automobiles, we always look for Germany. If you look into cheap labor or English speaking labor who is working in the night shift helping US and UK clients, that is available in India and Philippines. This is because you are getting the same quality work done from here, but at a lower cost as compared to the place where it is actually getting delivered. Moving on to the next slide. Now coming back to this particular page, you can see that whatever we have discussed till now relating to production, consumption, and in between that there is something called as distribution which is available, right? Distribution actually helps in generating the wealth. Why? If you produce something, do you think that you will be producing for free of cost? No, right? You will get some money. Whatever you are investing, you want to earn more than that. Similarly, when you are consuming it, somebody will be offering you free? No. What is going to happen? You are going to pay for whatever you are going to consume. In between, as I have told you, from the producer to the consumer, what is the thing we are going to do? We are going to have a set of people who are going to bring various items, very much things, so that from there, from the producing area to the consuming area, there will be a lot of persons involved. Intermediaries we call them. That is nothing but our distribution network, and that particular channel helps us to do the value addition for the particular product. Value addition here means the cost addition also. And ultimately what would happen, there will be various stakeholders who got benefited even in the distribution channel. When ultimately it is reaching the consumer, it will have some product plus a profit margin to that. Of course, profit includes loss here, because there may be some product which is actually helping us to get only losses in the short run or maybe in the long run also, but over a period of time, no economic activity can survive without making profit out of the activities we are doing. So I believe that this particular picture helps you to understand that. So what are the three important legs? The three legs are production, consumption, in between that is the distribution. What is the three leg helps us to achieve? The three legs helps us to achieve wealth creation. And now we have known about business, and we have also known about economics. Now what we have to understand? The topic of this subject. The topic of the subject is business economics for you. Now see the picture. The picture is about four triangles, right? Marked together to form another triangle. And it starts with an enterprise. That is nothing but the organization we are having. We have discussed about that. 8 forms. Trust you remember. And an organization is there. Who is going to be there in the organization? It's going to be the people. So how they are going to come? they are going to come in the form of labor. Okay, the enterprise is actually formed by another person also, he is called entrepreneur, right? And comes, these are the two persons who are going to bring what? There are two things, they are going to bring capital. One person will bring money, the other person will bring effort, and they have to do this activity at some place, right? That is the land. So what is happening there? So it is nothing but an entrepreneur using skills of another person in form of labor, and then employing various other factors of production by using the money available with him in a particular place, and then generating some income, thereby creating wealth and earning profit, right? So this is the steps which are happening, and for each and everything, if we quantify it with some amount, it is nothing but a data, right? And that data, if we are properly applying with various statistical formulas, then that gives econometrics. So if you are going to apply statistics in the business theories, whatever decision we are going to take, that is nothing but the business economics. Now the data, right? We are speaking about data. What is this data going to do? This data is nothing but collection of various information from different sources. Relating to what? Relating to the factors of production. What are they? Land, labor and capital, because they are the primary factors of production. There are some other thing also beyond this, right? But ultimately you can correlate each of your production element into any one of the basic factors of production. And then we have to understand a new terminology called 5Ms. We have some time for that, because we will discuss about that in depth in few minutes. It may be a science or an art. Why a business economics may be a science or an art? We have to understand what is science and what is an art. Art is similar to anything, like you are singing, you are dancing, you are playing some musical instruments. So it varies from person to person, not and more importantly, leave alone that, okay, if you are playing cricket, the shots played by Sachin Tendulkar is completely different from the shots played by Ganguly, because there is a personal touch, personal element to that. Anything like that is nothing but an art. But there is a different aspect to the science also. How we can do that? In science, if you are speaking about this plus this will give you this, certainly whether it is done by X, Y or Z, that will give the ultimate output. That is called as science, because science will tell about the process and the ultimate end it is going to achieve, and whether it is X, Y or Z or whatever the time it is getting performed, the output would be one and the same. Whereas if it is an art, there is a human touch or behavioral touch to that. What would happen because of that behavioral touch? It's very simple, it may vary. So today I am taking this particular class, tomorrow I may be taking it in a different version, but whatever expressions or examples whatever giving today, it may not be the same in a different class. But if we are recording it, what would it happen? It would be repeating the same example. That is one of the things which we have to understand when a human element is always involved. Now I have told you that we will discuss more about 5Ms. So 5Ms, we have to understand what are they first. Men, money, machines, materials and methods are called as 5Ms. They are actually related to the primary factors of production. How? That we have to understand now. Men. Men can be of two forms. One, a risk-taking man, and another a person who is not taking risk but who is willing to provide his labor. Please understand, men includes women here. So any human being who is taking a risk and ensuring that he is getting some activity done from others, he is also involved in that, and he is willing to take that particular risk. He is called as an entrepreneur. So he is a person who brings various items, men, money, machines, materials, method put together, and he creates an enterprise or an organization. After doing that, he is ensuring that all his primary factors of production are getting properly paid or rewarded. Ultimately, whatever left with that, after the amount he has received from the consumer, he is having some margin, right? That profit entirely goes to him. If he is earning loss, that is a risk he has taken, he is going to suffer the loss. But if he is earning profit, the entire thing is going to be him only, because the other factors of production will get only the amount what they have been contractually agreed for. They will not get anything extra. the laborer who is providing the important labor here, okay, they are going to come, and what they are going to do, they are going to offer their service. For that they are getting some money, and by getting that particular money, what they are going to do, they are satisfied that they have put some effort and they have gained for that. That is an economic activity, but will they get more? No. For them, the downside is limited, whereas for the entrepreneur, the downside as well as the risk is big higher, and that is the reason the reward is also higher there. Next comes money. Money is the lifeline of all business. It may be own money or a borrowed money. What is the difference between own money and borrowed money? I am having money today and I can invest. There is no need for me to pay to any other person. It is called as the own capital. Whatever I want to do with that, I can do. The next one is, I do not have money today. I am going to some XYZ asking him to lend me the money. So what he will do you think he will give it to me free of cost? No, he will tell me you have to pay me so and so percentage as interest. That is nothing but the borrowed money. So what is the difference between the own money and borrowed money? It is very simple, the interest component, right? In our own money, we will not pay any interest to ourselves, correct? So anything, whatever you are earning out of your own money will be directly landing to you as a profit. Whereas when you have used borrowed money, what will it do? You will first borrow the money and you have to pay the interest for it. The interest component, right? That is the reward for the person who is giving you that initial capital to you. And since you are paying that particular interest, you have to deduct that, because that money, even though you have earned, it's not a profit for you because you are going to give it to him. So that will reduce your profit. So in that particular action, what would happen? Because of that, the profit will reduce because you are paying money to some other person. So that is the most important aspect, interest between your own and borrowed capital. So why we need to have a borrowed capital? It is also called a leverage. As I have told you, that reduces the profit. The most of the people who are running business, they always look for other people's money to be involved in the business. Why? Because it is not possible for them to bring the entire money from their own sources. So naturally, they rely on some other person. The some other person, if they are coming as an equity participant, they can very well be a own capital. But it is not that everybody will be willing to join a particular other person's business or venture. They will lend him the support. But what they will tell, you have to pay me this much money as interest. So naturally, that money he has to forego as interest for the person who is lending him the capital. So money is also available now. Next one is about missions. So missions are the ones which are actually the items used to produce the raw materials, from raw materials to the finished products. So if you are going to have any service also, you will have lot of materials which you have to convert. So what you will do, you will buy that particular fixed asset and ensure that you are having that in our factory or the place where you are going to produce the particular product or do the particular service. So it is long term in nature. Example, purchasing some fixed assets, jigs, furniture, fixtures, etc. will come in that particular aspect. It is nothing but a machine that facilitates you to complete your production process or service requirements. For that, you have to pay upfront. Again, that may be paid by way of either your own capital or borrowed capital or a combination of both. Next comes the materials. You are having fixed assets erected. Do you think it will run on its own? First and foremost thing, any machinery has to run with some utilities, like it needs to have electricity, water, gas, etc., which has to be input into it so that it can run. And there may be some other consumables, etc. And for that, what you have to do? You have to pump in more money. And raw materials here is also more important, because you have to use the raw material into that particular machine or process whereby it gives a final output. And that is short term in nature, because what would happen once the product is available, then you can very well sell it in the market and get the money back. So it is nothing but your working capital. As long as we are managing our working capital really nice, we can reduce one part. What is that part? As I have spoken to you sometime before, interest part. Because in your own capital, which is much lesser, you will not pay any interest. But if you are employing your borrowed capital in working capital, the interest cost is actually huge. So the lesser the working capital cycle for you, the better for the business, because the business can earn more profit. And the final one, what we are going to speak is about methods. The methods is nothing but the process or the procedure by which a particular activity has to be performed, either by the entrepreneur or by the laborer. Because as I have told you, any methods whatever you are deciding or the procedures whatever you are going to instruct, it has to be done by men. Okay, who is the men here in our factors of production? It is the entrepreneur and the laborer only. So they have to go ahead and just do whatever has been instructed there, so that this 5M concept can help us in the factors of production, because they are the primary factors of production and help us to run the business, and by running the business we can earn profit, and by earning profit that helps to generate the wealth. Now we have to discuss about case studies. So in this case study, what we are going to do, we are going to understand about a business scenario so that we can understand business economics from a case study. A Limited is one of the shoe manufacturing company in India. They have both in-house production facility as well as contract facilities. So they are preparing that particular shoe from other persons, other smaller producers, and they are selling it in their brand name. So what they have done was that they have recruited a group of fresh, bubbly, energetic freshers, MBA freshers, to study the markets. So those people, those trainees have gone to the market, they have studied their existing markets as well as the potential markets. And one of the important observation what the team has provided was that they have studied for all the geographies, right? They have specifically pointed out that in central India, the penetration of wearing chappals by the people is very low. Okay, and the management was actually stunned to see that, and they wanted to drill down further, and they came to know that the area what they have covered is primarily of tribal population, and those people normally does not wear shoe or chappal, which is one of the reason in that particular area the shoe sale is not really great. Now having said that, now the management is in a dilemma now, okay, whether they have to go and market their product in the particular region or not. This is the most important thing. Now we have to understand something. Sometime before we have discussed about various aspects of economics, 5Ms, business economics, how a business. End of the day, please remember one thing is more important for us: profit. Okay, will we get profit? It is really good if the persons are going to wear the chappal, because their food is going to get protected. But end of the day, we are running a business here. What is the profit? Or in case if I am going to incur loss today, that's fine. But over a period of time, will I make a profit? If so, what is my payback period? What is the investment required is what we have to see. Some of the things which I want to tell you, okay, when you are reading this or trying to solve this particular case study is that first and foremost thing, please understand that this is a business scenario. Okay, there is nothing called as right or wrong answer. Why there is no right or wrong answer? You do not know now. If you introduce the product, 2 years down the line or 3 years down the line, you will get to know whether it is actually getting sold there or not. Or 2 years or 3 years down the line, you will get to know that nothing is getting sold or everything is getting sold. So we do not know the right answer at this point in time when the decision is actually taking place by the business. So what they have to rely on? They have to rely on the past statistics available, or they have to go by the intuition or gut in making a particular decision. And then you can come up with various thought process, but as a students, I want you to document all the rational or hypotheses in why you are arriving at the particular decisions. As I have told you, you can very well tell that the management should go and ensure that they are selling shoes and chappals there in the particular area. You can do that, or you can tell that presently that opportunity is not there, we do not have any statistics, let us not go there. Both the answers are right, but when you are writing it, you have to give the perspective, what is the rationale for that, what are the hypotheses you have considered in arriving at the particular decisions. In addition to that, few hints from my side. Look into the overall population which is available in that particular area. Okay, that speaks, because if you convince one person, then it is contagious in nature, right? You can convince multiple people, and it is very simple, right? If one person started wearing chappal, everybody started wearing chappals. Some 300 or 400 years before, our people are wearing only dhotis, right? Today we are all wearing pants, shirts, suits, etc. This has happened because we know that other people are wearing it and it is more comfortable, and over a period of time we are getting accustomed to that new culture. So we have to look into that aspect from the population perspective. Second thing, whether they are interested, okay, whether they are interested in buying this, okay, what makes them to get interested in buying this? It consists of two things. One, that willingness to buy is because they like this product, or their willingness to buy is because we are influencing them to buy. For instance, look at a situation, if it is a sports show, what would happen? There are times whereby if it is owned by a person like a famous cricketer like Virat Kohli, etc., naturally what we will do, there are persons who are following diligently Virat Kohli or Dhoni, like that we will follow that particular brand and we are happy to buy that particular product. It is primarily because they are getting influenced. It is not that they want the product, they just want a show, but they are going for a particular brand because their favorite sport person is actually providing an advertisement campaign there, and they are getting influenced by that. So we have to look into the willingness to buy, whether it is direct or induced. Induced is primarily by way of advertisement or making them feel that yeah, they can buy, etc., either by a direct marketing or by demonstrating it, going to them. Imagine a situation, a person is going into a hilly area without anything, and there is always a chance that he may have some leg pain, etc. You can go and demonstrate that the leg pain will go over a period of time. That is one thing whereby you can make it as a induced one for willingness to buy. Or direct, they themselves are looking for something because they are already suffering with pain in their legs, right? And then ability to buy. Okay, one of the important aspect what has been given in the case study is that they are tribal population. Now you have to understand that what is the amount they are willing to pay for this. Okay, so willingness to buy is there, and then the ability to buy, because if their income is going to be 200 rupees, right, and on a daily basis they are hardly saving say 5 rupees or 10 rupees, you cannot go and offer them some product which is really not possible for them to go and use. So you have to ensure that you are pricing the product whereby they have the ability to buy. So these are the items which you have to understand when you are deciding on the particular cases, whether you want to introduce your product in that new market or not. And also the manager would be interested in ROI, return on investment. Why return on investment? Because they are going to put some money there. In case if they have to introduce that, they have to create new distribution networks or new showrooms. In addition to that, there is always a chance that you have to enhance your production capabilities also, because you are anticipating some demand in a new area. So what is going to be my return on investment? Because I am going to put my money today, whether I will get my money back in 2 years, 3 years, 5 years, and what is the rate at which I can earn profit over a period of time is what we have to inform the management, because management requires this. Of course, they do not need something like for sure you are going to get profit, etc., but we have to provide them the rationale why we are taking the decision of either going there or not going there. If you are going there, what is the investment needed and what is the time period by which we are getting the investment back and started earning profit, and how we are planning to make the people to buy our chappals, and are they in a position to buy our chappal, whether their willingness is direct or induced, and more importantly, are they in a position to pay for the product or service we are going to provide. Moving to the end, we clearly know about now business economics and business economics. Before completing it, I want to give you an update about the term economics also. It is derived out of a Greek word, oikonomia, meaning household. So this helps us to understand about the origin of the word economics, because primarily those are getting documented from there. We have already discussed about how it was appearing in India. In India, the Arthashastra is one of the biggest treatises. It is not that before that economics was not there, it was there in a traditional form. We have also discussed about factors of production, which is nothing but land, labor and capital, and how it helps to create a particular enterprise, and those factors of production helps us to create a product which is ultimately consumed by the consumer, for which the enterprise has earned some money and profit thereby, and that profit actually helps in the wealth creation. We have also discussed about 5 M's and its relation to the factors of production. And Last but not the least, we had one case study, and I want you students to just go through that, play among yourself in a role play model so that you can understand how the actual business decision can be taken. Hope to see you soon in the next study note.